Hi, I'm Alan Clarke, Portfolio Manager, Diversified Funds and External Managers at Nikko New Zealand. I've worked in the funds management industry since 2000, the majority of that being responsible for diversified funds and the selection, appointment and monitoring of external managers. I joined Nikko in 2023 after more than 17 years at ANZ Investments in similar roles. The objective of the Nikko Balanced Fund is to deliver a medium level of returns with a medium level of risk. And when we say risk, we mean the volatility, the ups and downs and the prices, and that comes from that higher allocation this fund has to those growth asset classes, listed equity and listed property, where over 60% of the fund is invested. The overarching vision we have is to bring an institutional grade balanced fund to the market. Each of the underlying funds or investment strategies are managed by specialist, active investment teams, either here at Nikko New Zealand locally or through carefully selected and appointed external managers based around the globe. The balanced fund would suit an investor with a sort of medium time frame, maybe 3 to 7 years. So some ability and willingness to take on the volatility that comes with over 60% of the fund being invested in listed equities and listed property. But that is counterbalanced by those more defensive allocations to cash and bonds of nearly 40%. And that smooths the overall journey. An investor sitting somewhere in between a growth fund or a conservative fund. When we think about the underlying asset classes or the building blocks for our balanced fund, we think about equities, locally, that's Australasian equities, and then globally, of course, the much bigger universe there. And on the defensive side, we're thinking about cash and bonds, again, both locally and globally. And for each of those asset classes or building blocks, we've got specialist investment teams looking after that allocation. In Nikko New Zealand, I'm part of a 10-person investment team, and most of those folks are either focused on Australasian listed equity and listed property or Australasian cash and bonds. And for that much larger universe of tens of thousands of securities around the world, we've appointed 5 carefully selected external managers, 1 for global bonds and 4 different managers for global equities. And they are working hard on behalf of our members to scour that much larger universe. When we think about investment risk for the balanced fund, it's a combination of the top-down or macro risks. So we're continually assessing where do we think we are in that market cycle, the economic cycle. And if we think that the markets are set up for a tough time ahead, we can lower the allocation to those growthier assets, reduce our allocation to equity and listed property and build up our cash buffers. And similarly, if we think that the markets are set up after a dislocation, maybe set up for a much healthier next few years, we can increase that allocation to risk. But the risk is also thought about from a sort of bottom-up perspective when we think about the individual securities that have been selected. So each of those investment teams, both locally and globally, is handpicking those securities, taking into account the different sort of risks and opportunities for those individual companies. We believe the Nikko Balanced Fund is an institutional grade balanced fund for KiwiSaver members. The underlying funds or investment strategies we've used as the building blocks for this fund have served our institutional clients very well for many years. By institutional clients, we're talking about not-for-profit entities, insurance companies, New Zealand company pension plans and community trusts. And what we've done here is bring those different underlying strategies together in what we think is a robust and sensible way, and we've built a balanced fund that is greater than the sum of its parts.